of the most volatile earnings weeks might have started already, as we saw last night. FUBO and Shift reporting earnings. That's why FUBO stock went up over 12% after they reported earnings, and we're going to see why, as they had an excellent quarter too. Also, I already listened to the earnings call and read their shareholders letter, so I'm gonna give you my opinion on everything that we checked out. If you're new to my channel, welcome. Please consider subscribing and smashing that like button, since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Now let's get into my computer to read everything that they just published. Okay, so first of all, here they say that their second quarter, it was a record second quarter, reflects continued strong execution in support of our vision to define a new category of interactive sports and entertainment television, because even though right now they are just a TV streaming, a sports streaming service from the entertainment television, they are trying to get into the interactive sports industry as well with their wagering and their gaming platform, which we're going to talk later on the video. In summary, they delivered triple-digit year-over-year growth, total paid subscribers 138% growth year-over-year, and total revenue 196%, and advertising revenue grew 281% year-over-year. Overall, they reported excellent numbers. We also made significant progress towards our profitability goals, which is obviously always very interesting to learn more about their profitability goals, as we always want to have a kind of timeline of when they are expecting to be profitable. And here they said that their progress was driven by a 62% year-over-year increase in advertising monthly average revenue per user and a 30% increase in total monthly ARPU, or average revenue per user. Now, their guidance is something that we're gonna check later on the video, but first of all, we gotta notice that they increased their full year 2021 guidance to $560 to $570 million, representing a growth of 116% year-over-year, meaning that they're expecting to double year-over-year in comparison to 2020, which was the year where all of us were watching a lot of TV during the pandemic. Now, first of all, we can see that their subscribers have been growing quarter-over-quarter and year-over-year. It grew 47% between 2019 and 2020, and now 138% between 2020 and 2021. But one of the best things is that they were able to get over 92,000 new subscribers, and Analyst Plus, they were only expecting about 10 to 15,000 subscribers that should be added in quarter two, but they actually added 92,000. Also, their average revenue per user has been growing massively and accelerated this quarter, as you can see, 8% between 2019 and 2020 and 30% between 2020 and 2021. Now, remember that we talked about their expenses and how they are going to be profitable in the future. Now, they said that, however, expenses continue to be significantly reduced in proportion to revenue, resulting in a material year-over-year improvement in adjusted EBITDA margin, which improved from negative 95% to negative 36.2%, as we continuously improve our operating leverages and further advance on our path to profitability. Now, in the second quarter of 2021, our users paid and trial streamed over 245 million hours in quarter two, an increase of 148% year-over-year, and their monthly active users, MAUs, watch 134 hours per month on average. That's a huge increase year-over-year and quarter-over-quarter, meaning that they continue getting more and more share in the market. Now, their ad revenue reached $16.5 million and grew 281% year-over-year. That's a huge improvement, even quarter-over-quarter, as last quarter they reported about $12 million and now $16 million this second quarter. Now, this growth demonstrates the foundational strength of our advertising model. In the second quarter, our recurring advertiser base of Fortune 500 companies and blue chip national brands continue to rapidly expand, drawn to our platform differentiated and highly engaged premium audience, as 94% of our content was viewed on a big screen connected TV and 89% of viewing was for live content. Now, on their business expansion, we already knew that they had the exclusive Comic Bowl streams, but after that, they were able to launch on LG Smart TVs, and now they're pleased to announce that FuboTV has closed a partnership with VZO to launch on their popular SmartCast platform in the coming weeks, which obviously is very, very nice, as nowadays a lot of people do not pay any service as DirecTV, for example. Now they use all these streaming services available on Smart TV, Apple TV, or Roku, or Amazon Fire TV. So FUBO being added to LG Smart TVs and VCO is actually nice, because that will help them grow and get more of new subscribers. Now they're wagering on interactivity, which is obviously one of the best parts of this company, and why I invested in this company is because of their sportsbook. We are tracking well and are on schedule to launch FUBO Sportsbook in the fourth quarter of this year. The launch of our own sportsbook is an important driver of this strategy, as we aim to turn passive viewers into active participants and define a new category of interactive sports and entertainment television, which obviously is huge, because they are the only platform that is going to be only focusing on sports streaming or streaming services. Plus, also they will be offering a wagering app where people could bet on sports or on their team while they are watching the game. They did provide a preview, which is here, of this app and their gaming setup as well, that they showed on their earnings call. I will most likely put it here. Now we can see that for their guidance, they actually increased their guidance for the full year 2021. They are now expecting to have for the third quarter of 2021 $142 million in quarterly revenue and 815,000 of quarterly subscribers. Take into consideration that they were expecting between 830 and 850,000 for the whole 2021, and they are now expecting that they will have 815 just by quarter three. Now for the full year, they're expecting a revenue of $565 million for 2021 and 915 million paid subscribers or full year subscribers for FuboTV, which is obviously a huge growth. Obviously, the above guidance does not include any projected revenues from online sports wagering, as they're expecting to launch that sports wagering app and the sportsbook on quarter four, but they are not sure if they're going to do that, because everything depends on regulators. They are able to do that because they are done, they're finished, they finished their product. They already have a preview and everything, but they are waiting on regulators for many states. Now on their balance sheet, we can see that they have cash and cash equivalents of $406 million, total current assets of $136 million, total assets of $1.1 billion, and total liabilities of $536 million. So they have a very healthy balance sheet right now, as they only have $536 million in total liabilities. Now on their presentation, we can see that their advertising revenue grew massively, as we already saw year over year. But something that I always like to show you guys is their expenses as a percentage of revenue. As you can see, it's 155.3%, which obviously is because they are not profitable at all right now, but it has been improving a lot year over year. But the best part is what I told you guys last quarter, is the subscriber related expenses. Okay, there's hey FuboTV, fix this, expenses, no expenses. But well, they had a total expense of 92.1%, which last quarter was 95%. So they are finally profitable from their subscribers. They're finally making money out of their subscribers, which they were not able to do that in 2019 and 2020. Now, I did listen to the earnings call and I have some notes here, which I'm gonna read right now, let you know, guys, my thoughts on them. The first question that someone asked was that they were able to add 90,000 subscribers for quarter two when they were expecting about 10 to 15 and analysts were expecting 12,000 subscribers. So that person wanted to know what they were improving or what they were doing in order to continue seeing this huge growth that they had for this quarter. And the CEO answered that mainly their customer acquisition has improved year over year by a lot, and they have been focusing on improving as this quarter they have been able to have more efficient acquisition costs, which allow them excel their subscribers growth year over year. Another question that I like a lot was about their advertising growth, as it was huge, a lot more ad revenue and are growing faster. What is driving their ad revenue growth, especially their CPM? And the answer was that FuBo has three main components which are driving the advertising rates for FuBo, which are fill rate, CPM, and hours watched. One of the most important ones are hours watched. So people continue to watch more and more every single day. They continue to take more share, as we saw that they have 245 million hours in quarter two, which obviously was a huge growth. Then under CPM, their goal is to have a CPM of $35, but they are not there yet, as their CPM is around the low 20s, but they believe that they will be able to get to there as their CPM is growing more and more more advertisers are willing to pay more for their service, as we saw that their blue chip companies and Fortune 500 companies have been expanding as well within this FUBO sport streaming services. Then they did mention that FUBO is focusing on to target male of a 42 years old and people with a household income of $85,000, as we all know that this service is not as cheap as many others. Now, the other very important question was what drove engagement on their platform in the quarter. Was it sports coming back, product improvement, engagement? And this person asked this because their engagement was very, very strong. And the CEO mainly answered that they are mainly excited because of their product. They have done a lot and have done acquisitions that have helped with growth, as they have been able to launch the Play product and launch a fan view, which generated about a 35 to 37% engagement improvement on the content that they have. That highlights the fact that they are developing and focusing on sports first product to create more interactivity and engagement on the platform, as they said that now that they have rights, they have been creating other features around that have been increasing their engagement in the platform. They also said that they believe the engagement will continue growing over time, as 2020 they were averaging about 7.2 hours a daily, like people were watching 7.2 hours daily. And obviously, we were in the middle of the pandemic between March and June, and a lot of people were at home watching TV, watching YouTube, Netflix, and FuboTV and everything. And even though right now, even though many people are going back to normal right now, they're still averaging 7 hours a day. I do have to say that that's a lot of hours to watch TV in a day, but still that's obviously huge for FuBo, and that's why I'm investing in this company. This company represents about 20% of my portfolio right now, as it went up massively yesterday, and I know that I should not have a lot of money in one company, but I do see a lot of potential in this company and in the future of this company. And also I'm selling covered calls in this company. Now, this is not financial advice at all, but I do have to say that FuBo is reporting such huge growth that is very, very impressive for the industry that they are in. Obviously, I'm very interested to continue seeing how they continue growing and expanding quarter over quarter and year over year, but I'm not planning on selling this position or closing this position anytime soon. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Thank you and see you next time.